I am not a registered investment, legal, tax, broker, or dealer. All opinions expressed by me are mine, my own, and how I trade, and my thoughts and my ideas. You need to consult your own professional, you need to do your own due diligence, and you invest your money wisely. Investing has risk. You will see. Do your own research, do your own due diligence. Don't hold me liable. I'm just expressing my own ideas. Do your own due diligence. Let's start with two very important sayings. Bulls make money, bears make money, pigs get slaughtered. Everybody pretty much knows what a bull is. Everybody pretty much knows what a bear is. Pigs are investors whose goal it is to make the most amount of money in the shortest amount of time. The second saying from Warren Buffett, pretty good source. Rule number 1, never lose money. Rule number 2, never forget rule number 1. To visually demonstrate that rule and why it matters, the Act Smart Investor does a pretty good chart here. Initial loss, gains needed to recover. As you can see, when you decide to close your position, depending on what percent you close, determines how much of a hole you dig yourself into. So part of what I forgot to upload the first time while I'm re-uploading this is because I accidentally edited out the most boring subject. Sounds funny, but it's really account management and risk management. So for me personally, if I'm going to enter a trade, I'm going to risk 10% of my capital on a single trade. So let me give you an example. If your balance is $10,000 or even $1,000, and you're going to risk 10%, you're going to risk $100, right? And we always keep 25% of capital available. The next spreadsheet will show you why. So what I'm really saying is I have $650 to trade with, and I will never use 250 of it because I need this capital and reserve. Okay, that's really it. And then everything I say in the next spreadsheet will make more sense. So this is a spreadsheet I keep handy, right? This spreadsheet helps me not lose money. Here's how the spreadsheet works. I have a ticker. Let's just call it XYZ Corp. I bought 1,000 shares and I paid $1. Whatever the scenario is. So that means I spent $1,000. It means my average is $1. Nothing crazy, right? So here is what happens if I sell all the shares, right? So if I made 100% of $1,000, it's $2,000, right? Nothing crazy. But what happens if you sell on the way up? Let's say that my first price target is $1.18. If I were to sell 10% of my shares, that means I have 900 shares left, right? The profit, because I sold 1,000 shares at 18 cents profit, is $18. So what does that mean? That means for me to lose any starting capital, for me to get out of these 900 shares without losing any starting capital, my average needs to be about 98 cents. Or I can only lose 2 cents per share what I have left. Right? Because I would lose $18. That would be the profit that I made. So, this is an odd number, so let's make it easy. So 1.25 is my first price target. Let's say I sold 25%. That means I made $62.50, right? Because I sold 250 shares and made 25 cents per share. So that means I have 750 shares. At what point from my starting average does 750 shares cost me $62.50? Well, that's simple. 91.67. Now, you might not be able to trade in 4 digits for the stock for the ticker, so you're going to have to go with that. Or, you can say you can lose 8 cents a share. And that would be the 62.50 that I just lost. Now, what's interesting is in my spreadsheet, I have these golden rows. What does this mean? Well, these are what I call free shares. Shares you could never, ever lose money on, even if the company went bankrupt. Right? Why would you say that? Well, if my first price target was $1.25, and I sold 800 shares, right? Because shares remaining is 200, so I sold 80% of 1,000. It's $200 profit. So because I have 200 shares at $1 average, it is impossible for me to lose more money than what I already traded. Does that make sense? So what happens if my first price target is $1.60? Now I have 300 shares that I can never, ever, ever, ever lose money on. Now you might say, oh, you're flipping pennies. Okay. But what happens if you had Peloton or any stock and it went from 2 to 6? Right? So, if you could hold it, right, realistically, you're probably sitting in here, right? Somewhere in here, and you're kind of accumulating. But let's say that it goes 2 to 6. So that means I made $4 on 300 shares. That's $1,200. That $1,200 is more than 1,000 that I made here, selling everything. The previous scenario is the trade went in your favor, you held all the way through, it went good. What happens when your trade goes against you? Well, first is you have a plan, right? You're either cutting before the losses get too much. I mean, they gotta be small, right? Because we already seen the chart that said you lose money, you lose more than you think. Or you average down. You buy the dip. Now, there's a problem with averaging down or averaging up. The biggest problem is you don't know the future. So the dip could keep dipping, and the up could keep upping. Right? Like, you don't know where it starts and stops. You don't. So this is where you get focused on a longer time frame. So as we know yesterday, well, as you might know if you follow me on Twitter, I took a position in ZSAN around the 137 average, like close to the top, right? But I had my price targets. My first price target was 142. I actually sold at 141 because I thought it would keep going, but I took off half at 141. So what do we see in the other spreadsheet? You know, my average went down 4 cents. So my 137 went to 133. So then we get into today. Today we opened up a little and we started to go up. Good. That worked out really well. Went right back to 138. So even if I didn't sell yesterday, I could have got out for break even today. But I think I'm towards the bottom, right? We can kind of see the range. 115 to 157. That's our range, right? That's still a 50% range. That's pretty big. So what happened today? We went up and we came down. Alright, so like I was mentioning, when I took it yesterday, I really wanted 157. We started to get some weakness in here. I took half off around 141. So my 137 average, 141, I'm now down at 133, which puts me here. Right? Puts me about there. So today when we opened up and started to go up, and we started to come back through, I saw weakness. When I saw weakness, and I saw yesterday's low breaking, I realized we were headed to the next support. So what did I do? I did the opposite in reverse. I bought at 126 and 127. I sold back at 129 and 128. So what did that do? Well, I had a 133 average. Then I bought down here and it brought me back up. My new average is 126.5. We'll just do 127. So you're like, okay, it got weaker. Why didn't I wait to here? Well, when I was buying, I didn't really know, but I kind of knew this was support. So you're asking, okay, but you closed underwater. That's true. I'm down a little bit. So now my new plan kicks in. Where am I going to buy again? Here. And somewhere around here. You know, somewhere in this range. 115 to 118. So what does that mean? It means I'm going to be underwater all the way till here. But that's fine. Because let's say that I buy in here. So 115, 127. Simple math. If I buy the same amount of shares with a 12-cent difference, my new average will now be 121. Right? This will be my new average if I bought at 115, saying it's the bottom. We'll have to read the charts and go with it from there. But that's if I buy the same amount of shares. What if I buy double? Well, that's 75% of a move between the difference. So 121 or 127 to 115 is 12, or is 12. Half of that is 6. So actually, my new average will be 119, which will put me in right about here. Right? So now this is taking on more size. So that's the risk. We have more size in here. So what's going to happen? Let's say that when I buy here and here, it comes back up to here. Well, what am I going to do? I'm going to sell half. Now, that doesn't sound realistic, but let's say I have 20,000 shares. That's a lot of risk. If I can get back down to my 10%, like we originally talked about in the beginning, then I take in half my risk off. So now I have 10,000 shares at 121 or 119. You know, somewhere in there, because we bought in here, it bounced, we got out half, and now either we'll continue back up or we'll go back down. If we go back down, then we have to really worry about this, because you can kind of see this is protecting the gap, right? We're going to return to this area. Don't really think that's going to happen, but we'll see. So when I get this dip, I'll get the bounce. I get the bounce, I'm going to take my risk off. Now I can go back down. If it goes back down, guess what? Now I have a 121 average, and my new is 115. So now so what I'm trying to show here, this is a clip in, so it might not make any sense. I hope it does. Is basically, you know, if it bounces and comes back down, that's fine, because my new average that I'm going to come in is the 119, 118 mark, risking off of 115 instead of the 127 range. So instead of a 12-cent risk, I'm back down to a 3-cent risk. That's all I'm really trying to show here, and that's it. Loss, or 3% loss, because once this is out, I'm probably gone, because I don't know where the bottom is. But I can live with a 2 to 3% loss. 137 to 115. What is that? I can live with a 115, or I can live with a 119 to 115 loss. I cannot live with a 137 to 115 loss, or almost 16%. 115 or 119 to 115 is a 3.4% loss. I can live with that, because that just means I need a 6%, 7%, 8% gain to get that money back. And I got that on my opening day in here, so I'm not too concerned. That's the difference between that percentage of a loss, right? Let me show you my original entry. Right here to here, right? That whole amount of loss versus this amount of loss, right? Just to show you. Okay, so just to show you, this amount of loss versus this amount of loss, right? So when something's going against you, the key is to have capital, to not have your whole account in, to switch to a longer time frame, right? Because in here we got weak, and I didn't panic. I started looking for a bigger resistance, a bigger support. I targeted in there. I got what I needed, and I got a 4-cent bounce. right? So I took my 133 average. I took my 137 entry to a 133 average. Price went all the way down. I took my 133 average and I bought in about 127, 126 too. Sold back at 128 and 129. And I took my 133 average down to 127. Why? Because in here I had 10,000 shares at 133 and I bought 20,000 shares down here. So that completely flipped my math. Right? Just like I showed in the spreadsheet. So it went up 4 cents with a much greater number between the two distances. So now, yes, the stock was down 7% today, but, you know, I think my average is 127.3 or 0.2, and the bid-ask after hours is 127. So like I said, if sain comes down tomorrow, I'm just going to let it go. I'm looking in here. Right? I'm looking for consolidation, bounce, volume support, or something to tell me that this is the bottom. Buy it up, let it bounce, re-average, and we're going to start going. sain has better days ahead. If you didn't know, there's news that they're going to be presenting at the conference, and it recently popped. So the company isn't trash. If the company was trash, I'd have been out at the moment I went negative around 133. It's just consolidating, right? So we got our range, we got price going down, but we got lower volume. You know, versus LTNC, right? This sell-off here was not lower volume. These were people running to the exit. These are not people running to the exit, right? It's just, where am I panicking? I'm not. I'm just going to average down, be patient. So we see supports here, right? Right. So let's just draw our support levels so we know where not to panic. Right? Alright, so, you know, we're sitting at 127 average. Let's say worst case scenario. I'm going to wait to here, 0.88, and I'm going to, you know, buy a share and a half size, right? So if I'm at 10,000, I'm going to buy 20,000. So let's run through the worst case scenario. I stay at 127 average, and it goes down to, you know, 0.88. So what's going to happen? I'm going to buy twice the amount of shares I have right now. So if I have 10,000, I just bought 30,000, right? That will take my average to 97, right? So that's the worst case scenario. So the good news is, even on a bad day, high to low, the stock moves 14 cents. High to low, you know, right there, low to high, that's 17 cents. Low to high, even there, 6 cents. So I can get, if I buy 83, get 88. I can sell half there, take my 6 cents, buy again, and I can get out. But that's what having capital does. And maybe I'll explain that's why the GME squeeze didn't really kill as many hedge funds as you think it should have. But yeah, that's it. I got a lot of video editing to do. Hope this didn't suck. Hope it made sense. That is why if you hit your price target, you're trading with a plan, right? Like I had a plan in here. It came in. I said, okay, about 137, which I really got into late. I should have got 135. Different problem. 137. I really knew I was going to get, that's why it was too late. I really should have been in here. Different problem. So, came up through here, You know, as soon as we got through here, then we hit this resistance, right? That's what the upper wick is. We started to get through it. I was hoping we would get up to, you know, 157. I started to see weakness at the top. So about 141, I trimmed half. Well, I walked you through it. So anyway, so like I said, this is a bad candle, but I'm not worried because I scaled improperly and I have the proper capital to fix it. So, and I'm just, you know, not worried. Really just not worried. It would take a lot to get through this. Right? That's why this didn't come down. It looks close, and it is. You know, 119 to, 112. But honestly, to get below 96 would just be tough. And even if it does, I'm not worried. Because I have the proper capital and I have the proper sizing. So, this is how you don't lose money. And once, you know, if I get to a 1% loss and it looks horrible, 1-2% loss, yeah, I can live with that. Right? That's nothing. But that's how scaling works. So just as a quick follow-up, this video took me a couple days to make, so I just wanted to show you how the trade was progressing. This is pretty much how I'm going to trade sain up until we get some kind of results, or until I feel it's going extremely bad. Just take a look at these images, and you'll notice yesterday I bought the absolute bottom. So, you know, yay me, and, you know, we'll continue working in a good position and accumulating shares.